All right, guys. Well, welcome to the Montgomery Bucks County Real Estate Meetup. We got an exciting topic today. Can I just get a show of hands? Does anybody need any money for your investments? So we got a bunch of hungry people out there. We got a dynamite panel here where we're going to be covering using private money to fund your deals with some great guys up here that are very experienced in this game. So we want to make this very interactive. No presentations. There's going to be a lot of Q&A that Don's going to be leading, and I'll have them all introduce themselves. Before I get started, for the audience or for the speakers, I'd like to see a show of hands of who in the room is a new investor. So do we have any newbies out there? We got a few newbies. Where are my flippers? Who are the flippers out there? I know we got a bunch of them behind me. How about the portfolio guys, the landlords? So we got landlord guys, all right. And any wholesalers? I see one of my wholesalers. All right, that's good. Did I miss any other? But we have contractors. I've met a couple contractors this morning, but they're also investors. So I think we have a pretty good mix today. So with that, I'm going to turn it over to my guys to do a quick introduction, and we'll kick this program off. So Don?
Okay, so can you all hear us? Okay, how many people are looking for money? How many people have money? Okay, go to those people. Okay, well, first of all, thank you, Smarty, for inviting us. We really appreciate it. My name is Don Brown, and I run an organization called Funding4Flippers. Imagine what we do. Oh, hello, Maureen. She's here. So we're private lenders, and we lend in the Bucks and Montgomery County areas primarily, and some in the Central Jersey area. And we do single homes, multifamily homes, and BRRRR deals. I think I got that right. I think it's 5 R's or 4 R's. Anyway, we'll be happy to take your questions tonight. I'm going to pass the microphone to Steve, who will introduce himself.
Good evening, everyone. My name is Stephen Price, and I'm not exactly sure why I'm up here, but no, I'm kidding. So I have a company called T&W Inc. That's not nearly as self-descriptive as Don's company, but like Don, I do private money lending, small multifamilies and single homes. I loan my own money, so I don't do a lot of large investments, but I do partner with other folks who do larger investments. My areas are primarily kind of western suburbs. Chester, Montgomery, Bucks, Berks, Lancaster counties. I was talking to Serge earlier. I haven't done any Philly properties yet. I'm not opposed to Philly, but as Serge and I were talking, anyone who knows Philly, it's so micro that it kind of scares me because, you go over one street and you're in the great area, and you go over another street and you're not in the not so great area. So but anyone that is looking for something in Philly, I'm happy to talk to you. And hopefully we can answer your questions tonight. Don and Rich have a lot of experience. I had a long career in IT, and I got the chance to escape from the corporate world several years ago. I know several folks here have been in that same situation. So I've only been doing this a few years, but I've learned a lot very quickly, and I'm happy to help anyone any way I can.
Hey everybody, my name's Rich Bruner. I partner with Don. I've tried to partner with Steve, but we never got it together. Flipped my first house 42 years ago and have been investing in real estate ever since. Worked for numerous different companies. A little outfit named Coca-Cola, at a trucking company up in Lansdale area, and started lending by lending my employer the money to build a cross-dock warehouse in Percy area. So that loan I've held for, I guess, 11 years now. They've been paying me interest every month. Very happy to work with anybody that is not a bank candidate for a loan. You're going to find out that everything we do is going to be based on the project. If the project makes sense, we'll fund it. So if you have something you want to present to us, we'll go out with the experience we have. We can go out, look at the property, see what it should cost to rehab, how much you're going to put into it up front, and then we'll decide if we want to work with you based on that. So your credit score is not that critical, but as long as the deal makes sense and you've done 2 and made a profit.
I forgot to mention that Rich and I have done about 250 deals so far, and we're learning every day. Okay. There is one microphone in the back there, so if anybody has any questions, please grab the microphone and ask it. That way, first of all, we'll hear you. Second of all, we'll be able to record what you say. By the way, this, as you can tell, this event is being recorded by video and audio, and with Smarty's permission, we'll have it posted on our website. So if you miss anything, you'll be able to go back and watch it. So
Yeah, I'll be sending the video and the details out to the membership on the Meetup app, so everybody knows, and for the members that it's available.
So Smarty, as the moderator, ask the audience if they have any questions.
Yeah, so I have a couple of my own, but before I'll throw it out to you guys, what burning questions do you have as investors? Well, let me just actually have a show of hands. Who has already borrowed from a private money lender versus hard and conventionals? So we have some experienced private money people. So do you want to throw out the first question? Somebody has a question out there, or do you want me to throw the first softball?
Grab the microphone, please.
Hi, thanks.
Tell us your name, please.
Yes, my name is Prudence Brown. I'm new to the area. I moved from Chicago this past summer, and I'm new to investing in real estate. My question is, generally, what are the terms by which you lend? So length of lending, interest percentage, and amounts.
Okay. Well, the terms are usually something we like to discuss on a deal-by-deal basis. But generally, at least I'll speak for myself, and then each person here can speak for themselves. In our case, we lend 100% of the purchase price of the property, and as long as it's 60% or less of the ARV, and the renovation costs are your responsibility. And the reason for that is we don't want to take responsibility for choosing the color paint or what kind of granite you're going to choose or any of that stuff, because at the end of the day, the money you make is going to be based on the choices you make, and those choices should be entirely your responsibility. We also generally don't charge interest until, I misspoke. We charge interest, we don't collect the interest until the end of the project. You don't have to pay monthly interest fees, and that way you get to keep that cash in your pocket to continue working on your project. So that's generally the way it works. And as Rich said, the deal has to stand on its own. And we evaluate the numbers with you. We're very hands-on. We physically go out to the property with you. We want to meet your contractor. We want to make sure that the deal makes sense. If it doesn't make sense, if we don't think you're going to make money, we'll recommend that you don't do the deal. And if you choose to do the deal, we probably won't do the deal with you if we don't think you're going to make money. Our goal is to make sure that you make money. If you don't make money, it's not going to be a good deal for either of us. So that's our main goal. Steve?
Yeah, I would definitely echo the last thing that Don said. My goal, quite frankly, is I won't repeat customers. I won't repeat clients, people that I can work with. Relationships are everything in this industry. Networking, meeting people, and building strong working relationships. That's really what I want. So the only way that can happen is if the folks that I work with are successful. So like Don said, I do the analysis as well. And if it's a deal that I think, and I can tell you, I turn down more deals than I take on. Because again, I want to make sure that I've done everything I can do to make sure that people are successful. Now, a couple of differences. I loan also, up to 100%, but I will loan on the purchase and the rehab. And there's a lot of people always want to know, okay, what's your terms? And my stock answer is the answer people hate to hear is it depends, because there are a lot of it depends. A lot of it depends on the deal, but I do also look at the borrower. So if a deal stands on its own and it's really strong, then like Don and Rich, I'm gonna care less about credit reports and backgrounds and things like that. In today's market where things are tighter, we all know it's a little bit tighter and harder to make money on some of these deals. If the deal's a little bit tighter, but I'm working with an outstanding borrower and they have great credit and they have great, they have experience and they've done flips before and all like that, then I'm more apt to do the deal. And as far as the percentages and things go, again, it depends on the deal. If it's a slam dunk deal, then the percentages may be lower. If it's a more risky deal, because really that's what you're looking at from a lender's perspective is risk. It's risk versus reward. And so the riskier the deal, it may be too risky for anybody to take, as Don mentioned, but it may be kind of on that cusp and say, okay, it's a riskier deal. I'm willing to do this, but it's going to cost you a little bit more. So I try to be flexible. I try to work with folks. As I said, I've only been doing this a few years myself. So I try to work with folks that haven't done a lot, don't have a lot of experience, because everybody's got to start somewhere. But at the same time, as I mentioned, it's my money, personally. So, I want to do the analysis and make sure that I'm doing the best deal I can for myself and my clients.
When I talk about, we want you to see that you've done 2 deals that you've flipped in a timely manner and you made a profit on. We'll run whatever you're using for your business name for your rehabs. Take a look at your last 2 projects or your first 2 projects, if that's what they happen to be, and make sure you made money and that you got it out on a timely basis. Every day that you're in, you have to worry about carry costs. So every day you're in a project, your interest expense is going up. So you've got to factor all those in. You're not going to go into a property and say, okay, I can get this for 50, I can rehab it for 25, and I can sell it for 100 and make $25,000. That's all good and fine. You just got to make sure that if you take 2.5 years to do that, you're not going to make that 25 grand. So that's why we want to look and see, do you have the track record to make sure that you can get the job done and on a timely basis?
Yeah, I want to repeat what Steve said. At this point, virtually all of our borrowers are repeat borrowers. That's really what we're looking for. We're not looking for one and done. We're looking for people that will come in, have a successful project, do another successful project, and on and on and on. Because frankly, there's a lot of time and effort and cost on our part to find and work with a new borrower to make sure it's a successful project. We put a lot of time and effort into this because I think in all 3 of our cases, we want to make sure that the borrower makes money at the end of the deal. And in some cases, if you underestimate your renovation cost and you're $10 or $20 or $30,000 short at the end, we're not going to take over your project. We're going to, if necessary, lend the extra money to make sure that the project gets finished successfully, sold successfully, and everybody makes money. So it's not as cut and dry as it might sound. We're really your partner, even though we're really a debt lender. You all understand the difference between a debt lender and a partner, yes? So a debt lender lends money. We just get paid an interest rate. A partner gets a percentage of the deal, whatever your terms and conditions are. Well, anyway, I'm not interested in being a partner. I'm just interested in being a debt lender. I'm assuming you guys are this. Okay. Next question.
I was just going to throw in a question. For those that were at last month's meeting, we had a great presentation from Matt Heller about the importance of having the right insurance on your investment deals. From a private money perspective, do you describe what kind of requirements you put on the investor to, for example, putting you on the title, on the insurance policy and such? What other things do you wrap around the deal to make sure you're protected as a lender, in addition to making sure they're going to get the deal done on time and it's a solid deal?
Yeah, I honestly don't remember the specifics. There's a builder's risk policy, and there's, what's the other policy called? There's 2 policies, builder's risk and something else. Well, there's title insurance, certainly. Anyway, it's all very standard stuff. We don't ask for anything unusual. We have a whole document which describes all of the terms and conditions for insurance, and we're happy to share that with anybody that wants to see a copy of it. So
yeah, in this case, the private money lender would be a beneficiary on your policy. Their name's on the policy itself. So if that property went awry, there was a fire or something, the private money lender is protected as much as you are. So that's one of the things that happens in the very beginning.
Yes.
Can I comment on that?
Grab the microphone, please. No, we want it recorded.
My name is Greg Tigan. I'm a buy and hold investor, primarily in the western suburbs, 422 corridor. And I've just come across this very scenario where I was asked to get insurance on my primary lender. And I faced a challenge where my life insurance carrier wasn't able to create the asset allocation schedule that I wanted, because I've got several lenders. And so I was curious if the group has any experience with that, and if so, could they share with me, what carrier they use, and were they able to do that? Like, have you ever done Camoplan, borrowing through Camoplan, Sidras, and you've got one blanket note, and you kind of move properties in and out as projects progress, right? I was imagining something like that across my insurance policy so that I can protect everybody for everything, but not forever and ever, because things go in and out. So I'm looking for feedback on that, if anyone can share.
Yeah, in any of your investments, have you run into that where the investor had a hard time getting the right coverage for the investment, where you had to figure out another strategy to protect you?
Are you attempting to create one loan and to use it on multiple jobs?
One policy.
Covering all of my projects, protecting all of my lenders, but...
Or like an umbrella
So
policy.
are you just talking about an umbrella policy that you carry on yourself? Because that's not going to protect the lender in any way, shape, or form.
It does if you put an asset allocation clause in there, and my particular lender will allow that, but only this one lender.
All right, yeah, we would require builder's risk on that, naming us as additional insured and cover us in addition to yourself. So I don't see how you could do that on multiple properties, even if you're doing them all at the same time, because how are they going to allocate? If you've got 5 properties and you got $1 million in coverage, one of them burns down to the ground and it's worth $1 million, what happens to the other 4? They have no coverage.
Because you're only insuring the amount of the obligation.
Okay, yeah, we wouldn't touch that.
I think if we were to do business together, we would have to sit down with you and your insurance agent and work out a plan. I'm not smart enough to know what insurances are out there and how they can work and how they can be adjusted. That's why there are people called insurance agents who understand that stuff. We had Matt Heller.
Matt Heller was here
the last time.
Yep.
He was also a speaker. Oh, I forgot to mention, I run the DIG Central Bucks subgroup meeting up in Central Bucks. And so we have speakers come every month. And we had Matt Heller a couple months ago, and we have a video of his presentation. But anyway, we would sit down with you and an insurance agent and try to work something out. So I never say never until I get told never.
Yeah, Greg, Matt Heller is a member of this meetup, so if you want an introduction, we can put you in touch. He's a broker, so he's not with any given insurer company, but he may have some insights about maybe what carriers would cover that kind of situation.
Any other questions?
So, other questions out there? Shy group, there we go.
Grab the microphone, please. Tell us your name.
How you doing? My name's Greg. How about as far as like timeline and, as you know, we're in a fast-paced business. So if we get a deal this morning, we present it to you guys, what's the timeline?
Well, again, speaking for myself, if you need a what's it called, a loan proof of funds letter, that happens in an hour or so. And usually our funds, our funds are available usually as quick as it takes you to get title insurance. So once we have a relationship, we've done our due diligence.
I think needs a caveat there.
Yeah.
Get yourself in trouble. You don't just walk in off the street and get money in an hour.
Yeah.
Let me help him out here.
Yeah. Now, we're not an ATM.
Right.
That's a whole other business.
If that's the case, I'm borrowing some money from Don myself.
I've got a deal for you.
So, so I think it's an excellent question. And really with me, it comes back to what I talked about before about having that relationship because, and the deal, and I think these guys would probably agree with that. That's part of the reason why, as Don mentioned, it takes a long time to build those relationships and we put a lot of work into it. Because I can tell you, for instance, if I had someone that I've never met that contacted me about a loan, well, that's going to take some time to work through because I have no relationship with them. There's no trust that's been built up. Whereas if I have someone that I have a relationship with, there may be some back and forth about with the property and all like that. But once the decision's made, the money can come across pretty quickly. So it depends. For me, it really depends a lot on the relationship, whether or not we have it or not already.
Right.
And I will say too, if just to kind of look ahead for that, I think this is a really good reason to establish relationships with private money lenders ahead of time. And don't wait until you find a deal to establish a relationship with a private money lender. Reach out to private money lenders, whether it be someone here or somebody else. Establish a relationship because if they're like me, there may be they may want a credit check and they may want a background check and they may want some other things like that. You can get all that stuff out of the way and done so that when you do find a deal, you can just focus on the deal and not have to focus on all the other stuff.
So part of the relationship is knowing who your team is. From our perspective, you need at least 5 and probably 7 people on your team. And we need to know that you have these people on your team. Let me describe what they do. First person in your team is somebody who's going to be able to find the project. Finding the project, that's number 1. Number 2 is once the project is found, who's going to make the deal, right? Making the deal is no small task, as I'm sure you all know. Once you have the deal, you need to have a contractor, and you need to have usually a general contractor who has access to all of the subcontractors and relationships with all of the subcontractors, and you need to make sure that they are properly insured, that they provide 1099s or W-2s to their employees. And there's a whole, actually we spent a year developing a contractor's contract, and that's available for free on our website. If you go to Funding4Flippers.com, you'll see a big green button that says, I think it's called Construction Agreement. Click on that, you can download the agreement for free and use that or use a version of that. So that's the next member of the team. Obviously, you need to find the money, and you could contact one of us or anybody else that you might know. You need to have somebody, in my opinion, you need to have a designer, somebody who understands the neighborhood, who understands what finishes are necessary for that neighborhood. If you do a project in Brewery Town, the finishes are quite different than if you do a project in Norristown, for example, just using those as extreme examples. And they may help you lay out the what I call the floor plan as well as the finishes. So either you or somebody on your team really needs to work closely with you and your contractor to do that, because that could make the difference between $10,000 and $20,000 on the plus side or the minus side if you do that badly. Then you need somebody to sell the project at the end, and that could be your real estate agent if you're not one, or you need to have access to that. We also think you should have an accountant and a lawyer on your team. So we want to know that you have all of these people on your team before we really start to do business with you, because if you don't have those members on your team, you're going to need them. And if you need them, you should find out who they are ahead of time. And I'm sure each of us have many people we know who can do each of those steps, and we're happy to refer people to if you don't have anybody. So that's all part of the process of getting to know each other beforehand.
Now, what if all 7 of those people are us 2 right here?
That's not a licensed lawyer or a licensed accountant.
Yeah.
Is that a jailhouse lawyer? Is that? And the fact that you can wear a lot of hats. I do about 200 tax returns a year. I've owned a printing company. I was an operations manager for Coca-Cola. So yeah, the whiter your hair, the more you've done, and the more.
Good.
So I have no problem with 2 guys carrying 7 roles, but I want to look at your projects and say, did they make money and were they completed in a reasonable amount of time?
So no, I mean, I get all that there's a lot of due diligence that you guys have to do, obviously. So back to the fast-paced business, and we can get a pre-approval in 1 hour. Can you still get a pre-approval in 1 hour without knowing any of this stuff, or no?
Absolutely not.
Yeah.
No.
So this,
You know?
the relationship and knowing all of who our people are and who all those 7 people are
First,
and
we're
all
gonna
that,
look at-
that's got to happen now before we know what the project is.
Are you doing business under an LLC or your own names? What we're going to do is we're going to look at that LLC and say, if you bought a house, 2 months ago and it sold in 2 days after rehabbing it in 45 days, well, that's going to carry a lot of weight. If you had a project that you bought 2 years ago and you spent $100,000, you have it listed, put 50 into it, and it's listed for 150, and it's been on the market for 200 days, that's going to be a definite detriment. So your history is going to speak a lot for your credibility. So, and with the MLS and things like that, we can do that background check. That's not a personal background check, but it's an experience background check. And that'll carry a lot more weight for us.
And you mentioned going out and seeing the project. Like, so do you need to see a project and all that before a pre-approval is issued and
Yes.
all that? Okay.
Yes.
All right.
So I've probably, been involved in a lot of flips.
Yeah.
I'm too damn old to do it now. But we can go into a project. We may see things that you didn't see. We may miss things that are in your wheelhouse. But I can probably walk your project and give you a pretty close approximation of what it's going to cost to do.
My last question before I let everyone else talk. Between the team up there, you guys would fund the purchase price, but not the renovations, but then somebody would fund the renovations. Do you guys, would you work together as a funding team? Like one group would fund the purchase, the other would fund the renovations. Does that ever happen?
I think we would have to discuss that offline. I think it's a case-by-case basis. Yeah. So I don't think we want to answer that question, live on camera right now.
Well, I can tell you, I mean, one quick problem I would see with that is that pretty much any private money lender is going to want to be in first position. And so if you have somebody coming in doing the rehab financing after they're going to be in a second position, you're not going to find too many private lenders that's going to do that.
Gotcha.
So I do. That's one of the reasons I do purchase and rehab, because again, it'd be really difficult to find a private money lender that's going to take a second position on something.
Thank you.
Now we have done purchase and some renovation funding, but not 100% of 100%. That puts 100% of the risk on our shoulders, none of the risk on your shoulders, and that's not a good formula for success. By the way, to get to your previous question, the idea of knowing who your 6 or 7 team members are, it all starts with coffee at Starbucks or wherever you like to go. So it's not like a big fancy, project like where if you go to a bank, they have you fill out all kinds of paperwork and then they send it back to you because they forgot a period and all this. No, it's none of that. It's very informal. We meet at Starbucks or someplace. We get to meet you. We look at your previous projects. We get to meet your team members, primarily your contractor, because he or she has a lot to do with your success. And it really works that easily. It goes pretty quickly once we get started together. Does that answer your question, by the way? Yes. Okay.
Yes, thank you very much.
What other questions are out there? Burning questions.
Grab the microphone, please, and tell us your name.
How you doing? I'm Scott. My question is, have you guys done anything or invested in any new construction development? And if so, how do you approach those differently?
New construction is your question?
Yeah.
Is it stick build or prefab?
Stick build.
Stick build. I have never done stick build new construction before, so I have no experience to share with you. Maybe my colleagues do have that experience.
I've actually gotten involved in a couple of deals where someone else started it and then somebody picked it up and finished it, and I came into that deal, but I haven't done one from just breaking ground.
I'm in the same boat. Because it's hard to put a hard value on a piece of land, and usually if someone started on something and walked away from it, there's a problem. and they're not going to disclose that to you. So you really don't want to pick up the ball and run with it, because there's either bad permits, there's a bunch of other things that are probably hanging out that are not going to be disclosed to you. But unless you've got a ton of track record building from the ground up and in that same location, the rules in Philadelphia are drastically different than they are in Bucks County or Montgomery County.
Right.
So we stay away from it.
So just to add to that, from a lender's perspective, there's no value to us. It's hard to put value on a pile of lumber. You know, what's the security that we have lending, let's say, $100,000, $200,000 for a pile of lumber? It's just a pile of lumber. It's not a house. So, you know, I think if you want new construction, I think all three of us so far said it's not something we have experience with.
Now, with that said, you mentioned, it's funny because Rich, I actually have loaned on land, but it was a very unique case. It was at a lake, and somebody was buying land close to a lake where they were putting in campers, you know, pads for campers on. Mm-hmm. And so I did loan on that. And I would say that as far as loaning on new construction, is it like a spec built house that you're looking to do or something?
No, nothing in particular at the moment. It's just
okay.
Theoretical.
So I mean, if it was spec built, then you know it might be something that I could consider. But again, you know, like everyone else up here, I don't have any experience with it.
Right. So I asked you before if it was stick build or pre-construction. Do you know about pre-construction, prefab?
No.
Okay, so this is an interesting concept. There are many companies. I happen to know one of them located in Moosic, Pennsylvania, Moosic, Moosic, Pennsylvania.
Mm-hmm.
I think it's called Signature Builders, if I remember correctly. And you go to them and you either design from scratch or pick out of their catalog the house that you want. And they're beautiful, quite frankly. You pay them a small engineering fee, a couple $1,000 to get it designed exactly the way you want. You pay them 20% down for whatever the cost is, by the way, and then you pay the balance when they deliver the house to your property, but it's still on the truck, right? You don't pay, they won't put it on the foundation until you pay for it. Now, once you paid for it, they separate the tractor and the trailer, and you have a rental, a crane that comes and literally picks the house up or parts of the house and puts it on the foundation that you've previously prepared, and so on and so forth. So that's a really interesting way of getting a house built without doing stick build. It's much faster. It usually 6 to 8 weeks delivery. Mm-hmm. You don't have to have a crew of people. You don't have to manage people. You don't need general contractor. I mean, you still have to do the foundation and bring the utilities and all of that up to the property, but you don't have to do the build. And once the house is mounted on the foundation, you know, everything gets hooked up, and then whatever interior finishes you have. And the last time I was there, the cost to build and deliver a house was $85 a square foot. I'm pretty sure you guys can't build a house for $85 a square foot. So that's just an alternative to a stick build, just something to think about.
Is that something, Don, you said if it was that cut and dry, would you consider an investment in private money to help fund that kind of project?
Speaking for myself, it's a project that I would like to do just because I think it would be a fun project to do. But and most of the money doesn't get paid until the house is actually built and sitting on a trailer. So, you know, at least you have something that you're investing in. I'm sorry? If I remember correctly, and this is just one of them. There's many of them. The one that I visited was called Signature. I think it was Signature Housing or Signature something in Moosic, Pennsylvania. Yeah.
Oh, no. what he said.
Does that answer? I don't know if I answered your question. So take a look at pre-construction instead of stick build. No offense to any contractors in the audience here.
Okay,
Smarty?
what other questions do we have out there? Did we get them all answered? Sam.
So I would like
I
to
got
ask. Oh, go ahead. You have a question. Smarty, give him your microphone.
Hi, everybody. My name's Sam Shalansky. I'm a wholesaler. So the question I have is evaluating rental properties. I know there's no quick and easy, but you have return on investment, and then you have then cap rates and things like that. I was just wondering if you guys could touch on it. Now, I know every private lender has their own different evaluation system about how they look at properties to evaluate whether it's a home run or not, or whether it's going to be a win or not. But can you just touch on how to evaluate rentals, because it's different than a flip? So
You're talking about
I'm talking about a purchase,
to then rent?
renovate, and rent. Yeah.
BRRRR? Okay.
Yeah, but I was more concerned about the the borrowing money to do that rather than the.
Okay. Well, I don't know
refinancing
you,
portion.
and I don't know anything about how you do business, but generally speaking, and in my personal experience, wholesalers make the ARV higher than it is, and the renovation costs lower than it is. Now, maybe you're better.
Now, I didn't say anything negative about lenders. Now, come on.
He doesn't speak for everyone, Sam.
So I'm sure you're perfect as a wholesaler. No problem. That's on the record now. Okay. Again, it basically depends. From our perspective, we lend money to the point where it gets built, renovated, and ready to be either sold or rented. And it has to have an ARV. So we do the comp analysis prior to doing the deal, and it has to meet those comp requirements. And then, of course, we as part of the process, you do a comp analysis on rentometer, and there's other places to look for rentals to make sure that there's enough rent to cover. Now, are you yourself renting it, or your customer's going to be renting it after he's finished renovating it?
I think Sam's just talking in general. So evaluating a flip versus evaluating a buy and hold type investment.
Well, so on the back end, as I'm sure you well know, different banks have different deals for taking the deal out once it's been renovated and rented. Some banks want, no seasoning. Some banks want 3 months of seasoning, 6 months, 9 months, 12 months, whatever. Every bank's different. We would want to know all of that up front. We would want to know who's going to take out the deal at the end, what their requirements are, and so on. And if it's a BRRRR deal, banks will lend 75 to 80% of the after repair value, and usually that's as much as should be in the property in order for the flipper, or I guess you call it a flipper, to come out with no cash out of pocket. So we sit down and we work out all the numbers with you. There's no mystery or magic here. It's pretty straightforward.
Well, and so I think the one difference, and I think kind of what you're going to, Sam, too, is that they're going to look at potentially a rental property different than a flip, obviously. Because a flip, you can go out and you can look for comps, and you can find what the comps are for the flip. With the rental property, you're looking at the income that's coming in on the rental. So I think that's one thing that lenders, any lender, whether it be a private money lender or a bank or whoever else, they're going to look at the potential for that property to earn money and how much you can earn and whether or not it's going to cover the operating cost. And part of that would be, the financing cost of the deal. So I think that might be kind of the direction you were going in, looking at a rental, rather than just a straight flip. And so that there is that piece to it too. I mean, if it's a single family home, then you're still probably looking at comps as well as, the potential rental income on it. But then when you start getting into multifamilies, obviously, then it gets really hard to look at comps. There's not a lot of, it's hard to find comparable comps for multifamily. But so that's when you start looking at the income that it can generate. That's what they're going to look at for a bank to be able to refi it and get the money back out to pay off the private money lender.
We do lend to rental properties. The guys that are doing those, we got to make sure that not only are we getting our, and that's not something where you're going to pay the interest 5 years down the road. It's not going to accrue. You're going to be paying monthly interest on that property. So you got to make sure that that monthly interest is going to take care of not only the interest, it's going to take care of the taxes, it's going to take care of the maintenance, it's going to take care of all those other things that you're going to be required, and that it gives you some cash flow. So we can structure a loan to make sure that, not to make sure you get cash flow, because if you can't rent it for enough, obviously it's not going to cash flow. But we can structure a loan so that if you want it for 6 months, just a season, and go to the bank and get the low rates that are available today, God bless you. We'll do that. But if it's going to be something you want to take out 2-3 years, we want to make sure it cash flows for you as much as we want to make sure that you can pay us our monthly interest. So we do BRRRR loans. We've got one right now for 11 units in Quakertown. It flows. He bought the house. The rent roll was $8,000. He immediately tossed everybody out and jumped the rent roll up to $10,000, and he's been paying us half of that in interest. So in a scenario like that, we're perfectly good with it. And then once he's established in the area, he'll go out.
Because Steve is going to get smacked in the head here. So as an alternative to renting, we just had a workshop, I guess it was last week, on Airbnb. So as an alternative to renting with a 1 or 2 or 3 year lease, whoever you're wholesaling to, they might want to consider turning that property into an Airbnb property. Now, an Airbnb property is a very different animal from a bank's perspective than a property with a tenant in it, because now you're in a property that has what they call intermittent income, right? So you might have income for 2 or 3 days this week and nothing for the rest of the week and so on. So we found some lenders who actually will lend money on the back end, like a bank would, for Airbnb type properties. So they do exist. And so if your customer, as the wholesaler, you're selling it to, I'll call it the flipper, okay, who can either decide to rent it out for a long-term lease or rent it out Airbnb, you'll need a different bank on the back end depending on how they want to do that. The other thing that Steve was alluding to is if your customer wants to be renting it out or Airbnb it, we recommend you go and interview, either you or your customer go and interview 2 or 3 banks ahead of time and get all of those details worked out as to how they're going to take out. I can't compete with that. Anyway, how they're going to take out the loan at the end, because that's an important part of the project. Airbnb is an interesting concept. Smarty, can you quiet them down?
Yeah. Folks at the bar?
So I have a question for anyone in the audience. Can somebody stand up and give us your experience, good or bad, with a private lender? And you have to speak loud enough so that we can hear you over the noise downstairs. Anybody have experience with a private lender? No one? Or you don't want to talk about it?
I have nothing bad to say about private lenders. We got involved in a deal in Conshohocken, just down the street from here. And it turned into be really our fault. Construction took too long. Selling the house took too long. And the interest on a month-to-month basis, we were paying a monthly interest. The interest added up, and you mentioned carrying costs earlier. So it turned into really like a break-even project for us when it was supposed to make a decent amount of money, just because it took 2 months longer than it was supposed to. So that would be the one thing about a private lender that I would say is, the numbers have to work, like you guys kept mentioning. I mean, it's got to be quick and in and out.
Yeah, that's an excellent point. And so when I underwrite a deal, I'm from the South, in case you couldn't tell from my accent here. I tend to be, about 650 miles south of Philly. I tend to be conservative on my numbers, and that's exactly why. Because one thing that I've learned in working with folks is that it's rare, that, we're going to be in and out of it in 3 months. Okay, let me know how that goes for you. Because, it's inevitable that, Murphy's Law, It's going to take longer. It's going to cost more. You're going to find something under the floor that you didn't expect, like a dead body or something. And you're going to be 6 months when you thought you were 3, or you're going to be 9 months when you thought you were 6. So I always tell folks when they're doing their numbers, go on the conservative side. If you make more money than you expected, that's great, but at least you're not apt to lose money.
So my name's Dave. I'm Greg's father and partner, right? But so how do you guys do your research? I'm a real estate agent, licensed, and I know there's real estate agents here in the room. But on this particular project that Greg's talking about, one of the things that we listened to was the real estate agent, which wasn't me, but and that was part of our problem when it came time to sell. So how do you do your research? Yeah,
Are you
at the
saying
beginning it was worth this, and at the end it was not, but I told you so. So how do you do your research?
I'm not sure I understand your question.
ARV. So a market analysis tells you that a house is worth $400,000. Real estate agent says to us, yeah, $400,000. You know what? This house is really nice. It's got great finishes. I can get you $429,000, $430,000. And I'm not telling you we fall for that every time, but do you guys do your research that way as well?
Right. I am a realtor, only because it makes it so much easier to buy and sell the houses that I'm flipping and that we're lending on. So I'm going to look at it from the perspective of, am I going to get paid back? So I'm not going to sell you pie in the sky. And that's the advantage of working with guys that are lending their own money. And it's going to segue into another whole topic, is if you're dealing with a hard money lender versus a private lender, there's a world of difference in how they're going to structure the loan and how they're going to punish you if you don't perform. So just be aware that when a hard money lender comes to you and says, I can lend you money at 7.5%, and that's their annualized rate, but they want 5 points up front. Well, now that 7 became 12 if it lasts a year. If it lasts a month, it's 5 times the 12 months is 60% plus the 7 is 67% annualized. So just be aware that if you're dealing with a hard money lender and they throw these 7-8% numbers at you, is there a fee up front just for initiating the loan, which could be a couple $1,000s? Is there an exit fee, which could be up to 5% if you don't stay in it for 5 years? And we've seen all these things happen. So just be comfortable with, if you want a list of referrals, we could probably give you one from here till doomsday. That we're not looking, we don't loan to own. And that's what happens with a lot of hard money guys. They're going to sell you a pie in the sky, and then when you fall on your face, they're going to scoop in and take it for whatever money they've lent you. So just make sure who you're dealing with.
So thus the difference between a hard money lender and a private money lender, what you just said, correct?
Yeah. And so to go back to your question, I'm going to admit I don't have any secret sauce, when it comes to analyzing a deal. Basically, it's just sweat and hours of labor with me. I mean, I whereas most people may look at 2 or 3 comps, I'll look at 30 comps on something. I'll look at every room of the house, and I'll consider, I'll look at the economy, and just a number of things. And again, I'm always conservative. And I will say, and no offense to Sam, but I always tell people, anybody, especially people I work with for the first time, Abraham Lincoln had a great quote. He said, I don't know the secret of success, but I know the secret of failure, and that's to not to. I always tell people, I say, you got to learn how to do this stuff for yourself. Don't take, real estate agents have a job to do, and that's to sell you a piece of property. Wholesalers, they're doing their job to sell it, and a lot of them are straight up, and they'll tell you. Smarty's done it, Sam's done it. They'll be straight up with you, and they'll tell you what it's worth. A lot of them may not, And I tell people all the time, I say, if you want to know how to fail in this business, don't learn how to do your own analysis, and you'll fail pretty quickly, because I know a lot of people are out there doing that. And so, I can't answer your question to tell you, like, here's the surefire way to do it, but just to, really put the time and effort into it to learn how to do your own analysis, and then go conservative on it as much as you can, and walk it, and don't get, you hear people say this, but don't get emotional about the deal. Don't get attached to the deal. Walk away from it. Well, I think a lot of the best deals that people have ever made are the ones that they didn't make. As I said, I've turned down a lot more deals than I've taken on, and I usually go back and follow up with those folks when I turn down the deal, and I would say 80% of the time, they walked away from it, or they lost money on it, or they had to sell it, wholesale just to get rid of it because it didn't make sense.
Now, to be clear, you did answer my question. I'm sorry, I probably didn't answer it or ask it properly, but you did. I don't want to come to you with a deal and you say, like the real estate agent said, I can get you $400,000 for this house, and then I say, okay, let's do this deal, and then 8 months later, we're both holding the bag.
So I think that the goal is to work together as a team. You have certain information, we have certain information, you have a way of doing things, you have access to information in various ways, so do we. Generally speaking, when it comes to doing a comp analysis, I can't speak for Sam, I'm sure he does a wonderful job, but we want, Sam, you're going to get a commercial here tonight, so don't worry. We'll do a comp analysis that, depending on the neighborhood, 0.2 miles from the subject property within the last 6 months. That's our starting point. If you're in Philadelphia and you go beyond 0.2 miles, you're in a whole different neighborhood, maybe. And if you go beyond 6 months, again, you're in a whole different market segment. So some real estate agents, I won't name any of them, they'll go I've seen comp analysis 5 miles radius, 3 years out. Well, that's a whole different world, and that's of no value to us. So we have to work together as a team to come up with a number that makes sense. In fact, we just had a situation recently where our single largest borrower, who does about 60 or 70 flips a year, that's a real number, had a property that we looked at in Ewing, New Jersey. I went to look at the property. It was a beautiful 4-bedroom colonial, 3-car garage, et cetera, et cetera. And if you look at the neighborhood, it looked easily in the mid-400 ARV. And so I made the mistake of accepting the deal without going back and doing a comp analysis on the MLS. When I did, it came in, actually Rich and I did it together. It came in, I think it was like 360 or 380 or something. And at 360 or 380, there wasn't enough room really to make any money. So we went back and forth with the borrower, and he was concerned as well, because from his perspective, he needed to make enough money. He needed to be able to sell it for more than 360 or 380 to make any money. So what we finally agreed on doing is having an appraiser, an independent appraiser, come out and do a formal appraisal. I think it cost him $500 or $600 or something. And the appraiser came in, I think, at 4.25, if I remember correctly. And 4.25 was a good number. And we looked at the comps that he used, and we agreed with it. So we did the deal. But there's a case where a really experienced flipper almost made a mistake on doing a comp analysis that would have worked out wrong. It worked out okay in the end, but we're really that careful in that kind of analysis. So don't do a comp analysis 3 miles away and 3 years away. You'll get in trouble every time you do that.
And I think what we're hearing here is, dealing with private money, and I know just my personal relationship with these 3 gentlemen, is they are being added to your team. Consider them a team player with you, because the deal has to make sense for both of you in order for us both to make money. The last thing they want to see is you fail. So, that's why they're going to be there every step. That's why they like to go to your property, run the numbers, know you as an individual, so that at the end of the day, you know you're going to be successful and they know they're going to be successful lending to you, because what their goal is develop that relationship. So you do deal after deal after deal with their money and keep moving that money throughout the year. Like they said, you know, with the flipper that does 60 a year, I know one in Norristown that does quite a few a year in Norristown. You start developing those relationships, the money is there for you to do your investments over and over. And as the title of this session was, How to Build a Real Estate Empire Using Private Money, it's all about relationships with the money guys and add them to your team and bring the right kind of deals to them to make all of us successful.
So you asked about experiences with private lenders, right? So I had one.
Except from you.
Okay, before I was a wholesaler, I don't know why wholesalers are getting bad raps here, because we provided incredible service, but nonetheless, my first deal, my first intro to real estate, I was trying to do I'd done flips before with other people, but I was trying to do this flip on my own. And I got involved with a wholesale company that was not very reputable at the time, and I didn't know it. And I came to a private investor, a lender that I had met, and he happens to be sitting on the panel in the middle, the guy without the white hair. And I met Steve at a meeting, and I went to Steve to talk about this deal. And I was really excited about this deal and the profit margins, and I was ready. You know, I was ready. You know, I wanted to get started and get it done, and I was told the ARVs were this, and I was told the rehab was going to be X amount of dollars, and after sitting down with Steve, he saved my ass, because the ARV was not where, and this was when I was in the early days, and I didn't understand everything, and he saved my ass because the ARV is not where it was supposed to be. The renovations were more costly. When I got more and more contractors in there, I found out that there were more and more problems, and Steve and I have had a relationship ever since then. That's what you're looking at here, and I'm sure the other gentlemen are the same way, because they don't want to. And Steve didn't want to lend me money on a project that's going to lose, and he didn't want me to get hurt. And he saved me, talked me off the ledge, and helped me by not losing money. And ever since then, it was a great learning experience without really being hurt. So that's a relationship you want to have with these guys. So now, obviously, Steve and I have a nice relationship, and even though I'm a wholesaler, I guess. But if I know anybody that needs money, Steve's the first name that comes up in conversation.
So just a side note to the camera guy, when there's somebody asking a question, could you pan the camera to them? Okay, so we want to get the film.
We're paying you a lot of money.
Yes. It's worth an extra beer, I promise you.
Any other questions out there? Well, we're about a little after the top of the hour. That's when we usually like to wrap up the presentation. I'll ask our presenters, is there any other burning topics that you'd like to cover with the group? And then we'll adjourn.
You read my mind. So I was just going to say, of the guys up here, to give their one tip or tips that they would like to see from potential borrowers. And I would just say, I heard, I've kind of had this philosophy myself for a long time, but I heard a very experienced real estate flipper give a presentation a few months ago on. She was giving it from the perspective of flippers and rehabbers, but part of the presentation was on how to get private money, and this person had a whole list of things that she recommended that folks do when they approach private money lenders. And I went up to her afterwards and I just shook her hand. I said, I just want to thank you on behalf of a private money lender because you were so spot on. And, there's an old cliche that says you only get one opportunity to make a good first impression. I can't tell you the number of people, it amazes me. So you're approaching somebody for potentially hundreds of thousands of dollars and not coming to them prepared. Not coming to them with professional preparation and really thinking through what it is you're trying to do. You only get one, chance to make a good first impression. When you're going to a private money lender, whomever it is, do your homework. take the time to do some research, talk to some of your friends that do this, talk to private money lenders, get a good lending package, whether it be a spreadsheet, whether it be a Word doc, whether it be a combination of things. I've seen all kinds of different things, but come to them, have all the information that you think they're going to need right up front. Don't make them come back to you and ask for 20 questions. Don't make them do a lot of research themselves. Now, they're going to do their own analysis, but you come to them with 3 or 4 good comps. You know, you come to them with all your projections, already having a rehab schedule, you know, how much you plan to spend on it, what areas you're going to rehab, pictures of the property. You know, have all this in a package that you can come to somebody with and say, here's the deal that I'm looking for you to finance. Because one, you know, it tells people that you're professional. It tells people that you're really in this, you know, serious about this. Because I can tell you that for me, you know, I have a list of criteria. I have a project lending sheet that I send to prospective borrowers, and I say, okay, here's all the information I need to see. And I'll be honest with you. So I want to see that information because I want to do the analysis. But there's another piece, there's another reason I do it, and that's because I want to know if people are serious. I want to know if they're willing to put forth the work and the effort, because this industry, this career, this, you know, thing that you're doing here, it's going to take work. It's going to take a lot of work. It's going to take a lot of learning and a lot of work. And if you're not prepared to do it or you're not willing to do it, you're not going to make it. You're going to lose your money, and then you're going to lose other people's money. And that's not cool. So I just cannot overexpress when you're going to a lender, any lender. I mean, when you go to a bank, you know, they're going to ask for the same thing. You're talking about money that people have worked hard to earn, and if you're asking them for that money, think about it from your perspective. You know, what would you want to see? How would you want things presented to you? And I really just can't overexpress. If you come to them and you're not prepared, there's your first impression, and it's potentially going to be hard to overcome. So put together a good lending package, go to them professionally, get all the information that they're going to need up front, make it easy for them, and they're going to be more apt to want to work with you, even if the deal may not be the greatest deal in the world.
Probably just to reiterate, if you ever are approached with that hard money lender, make sure that they disclose to you all the fees that are involved. Is there a loan origination fee? Is there a preparation to papers? Is there an exit fee? Because they'll lure you in with those low interest rates, and then when the deal's all done, you're going to wind up finding out your whole profit went to those hard money guys.
And just to clarify the difference between what we're calling hard money lenders and private lenders, hard money lenders generally use money that they borrow from other people. They'll borrow money from a number of other people, pool it together in a big fund, and then lend out a percentage of that. So they pay money to the people they borrow money from, and then they mark that up with additional interest and additional points. Whereas the three of us here, we use our own money. We're not marking up money from other people, it's our money. So that's why generally the costs for using private money is lower than that from a hard money lender, even though they may offer you a very appealing interest rate. Like Rich said, you really need to ask lots of questions about all of the other costs. But I want to emphasize what Steve said. Preparation is everything. If you don't have a deal in hand and you still want to work with private lenders, then like I said earlier, contact us. We're happy to sit down with you at a Starbucks or a Panera Bread or, you know, some lunch truck somewhere. We don't really care. And let's get acquainted. As I've told this young lady sitting in front of me, actually, money is the easiest part of the equation. There's lots of money out there. The trick is to find a good deal that's going to make money. You can work with Sam. I'm sure he's always got good deals for you. I'm going to charge you for that, Sam. Don't worry. and the Smarty, and any of the other wholesales in the room here. But get the deal. Oh man, why is it me with all the noise? Make sure the numbers work. Put your package together and present it to us as part of the process. I have a video actually which goes through all of that. If you go to our website, which is funding4flippers.com, the number 4, not the word 4, funding4flippers.com. On the home page, you'll see a video which explains all the things, explains the difference between hard money lending and private lending and what we need. But anyway, we'll be here for a little while, I guess. How long do we stay here?
Yeah. So we'll wrap up. I want to give everybody, give them a round of applause. I think this was a good session. And as our speaker said, the time to get to know these guys is now, not necessarily when you have a deal in hand. Start building relationships with your investors and your money guys. They're good. They're here to help. I know a lot of deals that I run into, I need proof of funds with the homeowner before I can even do the deal. So you have deals, don't flood them with all that information, but start to get to know these guys. So when you have that right deal, you already have that rapport with them to now present those numbers. And like a couple of the gentlemen were saying in the middle here, time to market, time to speed the money and getting this project going is critical. So start that rapport building early, and when the deal comes, it'll go a lot smoother.
And let's give Smarty a round of applause for organizing this meeting.